Kia ora, Craig. Sorry, there was a slight delay. We tried to do a coffee break really quickly, and I've brought my coffee up here with me so we can keep going as on schedule. Thank you, everyone, for filling in the polls. I think one of the interesting questions I just wanted to highlight was, do you think it is possible to do impact investing in the secondary market? And 63% said yes, 7% no, and 30% don't know. So maybe we will learn about that in the following sort of 4 presentations. So this session is titled Direct Impact and Iwi Investment in New Zealand. And to start us off today is Craig Weise, the CEO of the New Zealand Green Investment Finance, which is an investment bank set up by the New Zealand government and funded by them in order to enable more green investments and reduce our emissions. As Grant mentioned earlier, they recently went from a $100 million fund to a $400 million fund. So must be doing a lot of good things that the government appreciates. And, you know, Craig has spent many years in the finance and investment banking industry, and I'm sure has a lot to tell us about green direct investments within New Zealand, maybe in the climate tech space, etc. So without any more from me, I'll pass over to you, Craig, and thank you for your time.
Oh, thank you. It's really, really great to be here. And kia ora all. I'm really happy to be able to give you our perspective because I think it is somewhat unique in the market. As mentioned, not only are we capitalized by the Crown, but we have a role to play that is both about investing our own balance sheet directly as a direct investor, but also, you know, we're really concerned about growing the market and capital flows into low carbon activities as we transition into a lower carbon future. So we take that whole of market view, and yeah, it's very interesting to hear your poll response, and we'll delve into some of those issues, I think, during the session. I'd really like to leave you with 3 kind of key messages. 1, some perspectives on low carbon or climate friendly investment. 2, who we are and what we're doing for those of you who haven't come across us in the market yet. And 3, some things for you all to think about as stewards of capital and things that we can be doing collectively. But first, I will go to my immediate environs. As Craig mentioned when we started the conference this morning, I'm returning from COP, sitting here in MIQ. It happens to be my last day today, which is nice to only be here for a week, not 2. It has an unintended consequence, which is that I get kicked out of here at precisely midday. So the NZGIF will come knocking and ask me to leave. I say that because I would very much like to stay and hear what some of my colleagues say. Events like this are really, really important, I think, for the market, particularly when we've got something really, really big and gnarly sitting in front of us collectively. Yeah, my apologies in advance for not being able to stay and listen. But returning to COP for a moment, for those of you who watch the kind of proceedings, you may get a sense that there's a lot going on, of course, between sovereigns, and that's definitely the case. But I think what's less well understood and reported on is that COP is actually also the largest kind of climate-focused event in the world for all things climate related. So investors are there, NGOs are there, companies are there, nations are there, showing, you know, where they are in their own evolution. It's a giant showcase. It's not a single event, it's many, many events. And the challenge is actually digesting it all because there's so much on. So it was very good to be there doing that for our organization, bringing that back to NZ. But it's also really handy in context of giving us that perspective, which, you know, as we step back and consider these issues, where's the rest of the world? What are the similarities between what they face and we face, and what are the differences? And I think one of the things that you can't help but absorb on a daily basis in that environment is that the world is really moving actually quite quickly on a number of things. Perhaps not at the sovereign level where, you know, action faster and with better commitments is something that we probably all would support. But certainly companies and the rest of other actors are very quickly moving on. And why is that? Well, this is where I'd like to give you some perspectives on climate investment, because I think it's very easy with the amount of movement across the regulatory environment, consumer preferences, society in general, to lose sight of actually what I think investors can relate to in this, which is essentially that climate investment is really about participating in what is probably the largest energy transition to occur in the last 100+ years. If we think about the Industrial Revolution and how that was, from an energy perspective, fueled by fossil fuels, etc., really climate investment is about the climate revolution, i.e., a new era in which clean energy is coming to the fore. And this isn't just about large-scale renewable projects. It's actually about all the upstream, downstream, in-home, and other related ways in which that manifests. And so it's actually really a period that will be, I think, remembered in the future as one of incredible disruption. And disruption, as you all know, is both a risk to be managed, but it's also an opportunity. And I think for New Zealand in particular, given where we are, one of the things that we have to think about is how we actually provide and support from a capital perspective, managing through that transition, not just from a, if you will, compliance or regulatory perspective, but to take advantage of the opportunity that lies therein, to literally be a participant in this new economy where all bets are off, and the big legacy players on a global scale are going to find themselves increasingly under attack. To highlight, you all will probably have noticed and possibly balked at the Rivian valuation that is in the market at the moment, where it's leapfrogged to, I think, the third largest cap automaker in the world, notwithstanding its very humble metrics. But that is indicative, I think, of the kind of size of the prize that exists across all sectors. And really, fundamentally, once again, it comes down to energy. So if you can get your head around a climate investment from an energy perspective, you can open up new ways of thinking about business, productivity, efficiency, and in a different way and through a different lens. And then I think the thematic for your own organizations can start to come to the fore and crystallize in a way that is probably more user-friendly than when we just think about it from a pure carbon perspective. The things are definitely related, but I think that's often a useful way to have the dialogue in the investment universe. So that's a few thoughts on what's going on there. Certainly observations to bring back on the technology side, which was mentioned in the introduction. Look, there's not an area of the economy that's not being touched by development in technology. A lot of it's relevant for us in New Zealand. We're not doing a lot of it here necessarily yet, and that's a real opportunity for us. But the world is certainly moving on across all areas of that, and that's not just around how to electrify or miniaturize. It's what actually a hydrogen economy means. It's actually, what does it mean when you start to be able to introduce things like tidal energy, or when you have large-scale solar, or the many thousands of ways that these things manifest in business and daily life. So the opportunity is huge. But what does it mean, I guess, for yourselves in thinking about how to access that opportunity and how to invest in those things here in NZ? And I make that distinction because I think, although we talk about climate investment on a global basis, the reality is every market is constructed differently. That exists for us, not just from a large scale renewable energy generation perspective, but also exists with respect to other aspects of our market, which includes how our financial markets are constructed. And so coming back to that poll question earlier, do you feel you can be impactful from an ESG perspective investing in listed markets? I think the investable universe, if you're looking to have the most impact as fast as possible from a carbon perspective, is actually relatively limited at present. It's great to see the developments that are occurring, make no mistakes. All the green bond issuance that's coming online is fantastic, but the construction of New Zealand capital markets and where actually money flows means that, you know, the banks play a very large role, and that's not directly investable for many organizations, and the private markets play a very small role. But when we think about impact and we think about the time-sensitive nature of it, we do feel that direct investment is the best way to have the highest impact the soonest. And it will be a long time until those opportunities necessarily fully manifest in the listed market environment. So they will do so because the architecture, I think, for change has been put in place under this government, and those things will come into play over time. But there's a gap there of however many years, you know, one would like to guess at it, where being really impactful means doing things a little bit differently. Now, that's why we exist. You know, the Crown, obviously, the government took that decision quite deliberately. And so I'm now going to move to tell you a little bit more about us before I carry on, because I do want to leave a little bit of time for questions as well. And in doing so, I will just share my screen for a moment. I think. Bear with me for 1 second. Try to share screen. There we go. Share the right screen as well. Very good. Hopefully that's coming through now.
Yes, thank you.
Excellent. You never know with the tech, always good to check. So look, I've just put up a document that you'll see from us in various forms. It's in our annual report. It's something that we talk about as a kind of our strategy on a page, but I think hopefully it gives an overview of what we're trying to do. So I won't cover every point on this in this document, but I will say that, you know, we have a uniquely flexible mandate to kind of invest as we need to help achieve our mission. So that's not just investing in things that help reduce emissions, but doing so on a commercial basis and to crowd in private capital. Obviously, those two things go hand in hand. If we're not investing in pricing risk appropriately, then how can we expect the market as a whole to come along with us? So that flavors everything we do. And coming to the point I mentioned earlier about us not just being an investor in our own right, but thinking about how the market can, you know, get more capital into low carbon, you'll see down the right side are kind of strategic goals, and I'll particularly point out a couple of them because our increased capitalization allows us to, I think, be more effective in executing on those. And one is seeking out larger opportunities, so having a bigger strategic role in kind of large capital long-term programs where, you know, we can use our resources, which include our capital and our people, to help get them over the line. That is something that's required, of course, to then make them investable for others. And then the third on the right, of course, is we're very conscious that where the money is in the market and where the opportunities in the market don't always align, and that this is a hallmark of the New Zealand market in particular, where there's very little, relatively speaking, there's very little money that's devoted to direct investment, less than 2% of the overall managed pool of capital in the country. So, you know, one of our missions is to make and produce opportunity for the rest of you by, you know, aggregating and developing product. And I'll come to that in a moment because I'm going to skip a couple more slides. And in doing so, you know, we're looking across the market. So we're looking, of course, at all the sectors where we have an emissions profile. Just to help you understand our DNA a little bit, when we think about those, we think about both where the sectors are from a technologies and solutions perspective, how investable they are, i.e. Is it commercial, the activity? And we also think about how far away those solutions are as well, and that frames kind of how we look at them. So we essentially kind of overlay, if you will, emissions, maturity, and kind of market barriers to think about how we can scale. Currently, our portfolio is heavily weighted towards transport, distributed energy, and energy efficiency, because those are the opportunities that are more mature and kind of ready to scale at the moment. And we are starting to see some things come through in the ag space that will make our first agricultural investment here shortly. And we're thinking really hard about plastics and waste. Those are big parts of the challenge, but have market structure issues that make them challenging from an investment perspective as well. We think quite differently about going into deals. It's not just because we have that flexibility in our mandate, but so we can participate wherever we need to in a capital structure. But we also think about what the needs are of the opportunity over time, i.e. when it's going to be ready for co-investment, or what function the investment can play in our portfolio. I won't talk too much about the ones that we've done to date. I would just say that our first round of investments were designed to kind of trigger the imagination of the market as to what low carbon investment can look like. Sometimes it's really obvious. For example, starting a specialist EV fleet transition and finance company. Sometimes it's not as obvious. Thinkstra, which is basically an Internet of Things company. But when we look at these investments from a carbon perspective and the potential benefits they can have, the things start to fall out in quite a different way when you think about that lens. But what I really want to talk about for yourselves is this investable universe issue. So, we are actually very actively thinking about that when we go into investments. One of the reasons that we made the investment in Carbon Group was because, that sort of company can be very, very scalable in terms of becoming a large finance company playing in the EV space. And in fact, we're about to see that because we're about to take on a bunch of external private capital there. It's still direct, but the point is it's very scalable. I think the most exciting thing for the market as a whole will probably be some of the work that we've been doing in solar. So not only in residential portfolios, but our recent announcement around on the commercial side. So, we think about these deals from an innovation perspective and our role in the market. And so what we're doing in that area is actually both providing a critical mass and scale to development of a PPA market in commercial, but also providing, development finance so that many participants out there who are developing solar actually are going to be able to access it, and solar can scale more effectively. That ultimately will express itself in the first half of next year in one of these bubbles on this slide, which is that financial product one at the bottom. So we will be bringing to market sometime in the first half of 22 a product that will suit primarily institutional investors, but will be drawing private money into what we do, which we think is a really, really important part of our role as we can help develop the market. It's not just showing what these investments look like and building return profile, but it's also making them in a format that is investable for yourselves. So that's kind of a little bit about where we are. I guess I want to get out of this, which I'll stop sharing. And talk a little bit about what you guys can do and how we see that before opening up for any questions that might come in. I think I touched on a couple of things. Although there are opportunities in New Zealand, and will continue to be, and there's probably a growing set of them in listed markets to be impactful, we think that the most impactful things that can be done right now in context of where we are actually in private markets, and that's both around private equity VC, project finance, and private debt. Those, I think, require us to think differently about how we collectively behave. My overall comment would be that, just on the metrics I talked about before, we don't have a lot of money allocated to direct investment in New Zealand, generally speaking. We probably are, I would argue, overly concerned about liquidity requirements in the short term when we actually have long-term horizons, and probably don't have liquidity needs in those timeframes. And so there are things that we can think about, and you can think about in your own decision making, that would, I think, help support giving New Zealand more capital actually where it's needed for the transition. In the short term, that's really good for us. But I think long term, if we don't do that, the world is moving faster than we are. And it will actually be a source of competitive disadvantage if we don't provide enough there, because this opportunity that we talked about will be, the rules haven't been made or decided as to who the winners will be, and we can compete, but only if we move and act. And that is in part a capital allocation question. So what can you do and be thinking about? Well, I think firstly, consider your own mandate. Do you have an allocation to alternative assets? Or are you able to invest directly? The answer may be yes, the answer may be no. I'd be really keen to understand how many of you have actually made a direct investment in something that is directly and immediately impactful in the low carbon space. I don't know if it's probably too late to do that as a poll, but I suspect the answer will be not many. And some of that will be because of your own mandates and how they're constructed and how decision making is occurring, possibly even before it ever gets to the investment committee. Two, I would say, generally speaking, this era we're entering into is new in every way, and that means we're going to have to be innovative overall, and that means supporting innovation in the financial markets as well, whether that's new managers, new structures, new product, whatever way that's going to express itself. If we want to develop these opportunities very quickly, then we're going to have to finance them. Finally, I would say, I would ask yourselves around, your long-term view about the transition. As I described it before, it's an energy transition. It's going to play out over a long time. It's a thematic that's here to stay. The rest of the world is moving there very, very quickly, and we're generally a receiver of these things. So how can we not just be an importer, but how can we actually participate? And in your own organization, are you thinking in that long-term way? What are your risk tolerances? In the end of the day, how do you feel about leverage? No matter how this plays out, whether it's a green bond issued by the sovereign, or whether it's local government finance, or whether it's corporates coming to you, there is a kind of aspect of it which is about investing today to realize this benefit over time. And that does ask some serious questions of organizations. I think we're the stewards of capital, and it's a massive opportunity for us. The question is, what will we do and change, and how will we innovate to actually help those flows? I will leave it there because we've got probably just enough time for some good questions, and pass back over.
Thank you, Craig. Yeah, and I appreciate you making sure we have a few minutes left for some questions. I think lots of people might have some for you. So if you're on Zoom, just flick it through, or does anyone in the room have a question? Otherwise, I, as MC, definitely have some. My one question I had was, in your sort of climate investments and direct investments where you are seeking impact, are you open to co-investments with, like in the room we have a lot of trust members, or other organizations as such?
Oh, look, absolutely. And I think, we always welcome that. And I guess one of the things that's useful and helpful often in talking to investors is understanding, what they're looking for. So I'm sure some of the parties in the room will be, known to us and have had conversations. Others maybe not. If not, I encourage you to reach out. You can, to myself or any member of our team, really, by hitting the website. But co-investment is a big part of what we're looking to do, and we welcome it. Great.
Another question I had was, I actually put that poll question up around impact investing in secondary markets or not. It's something I've been grappling with, and you sort of alluded that it's more impactful in direct investments, but do you think there's a problem with sort of blurring of definitions, where we have all of these terms for ESG investing, responsible investing, sustainable investing, themed investing, etc., for that part of the spectrum? Do you think maybe we should try to at least keep impact investing for those direct impact investments that can, we can not easily, but we can measure the direct impacts that capital is having rather than some company you own shares in is having?
Yeah. Oh, look, it's a great question. I think, it's exacerbated by the speed at which everything's moving and in some senses converging. Certainly, in impact investment circles, you think about impact first versus finance first investment. That is not mutually exclusive to any other kind of overlay, if you will, but the language and terminology, of course, is changing all the time. And I think the widespread adoption of ESG principles, which is great, but also exacerbates that in and of itself. The two are not mutually exclusive. Thinking about ESG is actually thinking about impact. It's just a question of how you're measuring. And that's what it's all about at the end of the day, right?
Yeah, I guess I see it. ESG is sort of like the company impact, and then impact investing is focusing on the capital impact that you provide. We've got one more question actually from an anonymous attendee, and he or she asks, can you recommend some good courses, etc., that investment committees can access to grow their ESG knowledge and expertise? And before I let you answer that, I just want to say we ran our first executive training day on sustainable investments yesterday. I think it was fairly successful for its first iteration, and we'll be doing more, but maybe you have some other sources to share for us, Craig.
That's actually a really excellent question, because I think what you've got a number of things that have matured, that have come in from a more, let's call it, compliance perspective. And, at the end of the day, although that's helpful, that's actually not, that's not the nub of the issue. In terms of organizing itself, I guess, if you will, around how to educate these things, you've got programs in a number of institutions that are kind of bespoke, but I can't say that I'm aware of one that is, let's call it, all-encompassing, if you will. You've got IOD doing things, you've got a number of organizations doing stuff around TCFD, etc. But from a pure investment perspective, leave that with me. I can find out more, and I'm happy to do that through this forum if there's a way to follow up. But there's nothing that's holistic that's popping to mind, actually, which is maybe quite relevant, I guess, for all of us in thinking about that.
Yeah, great. Thank you, Craig. So in keeping to time, we should probably move on, although I could ask you a few more questions. I better not.